Everybody, I trust that you are well and you can hear me very well. Sorry, we are starting with a few minutes late. We're just waiting for the quorum to join in so that we can be able to begin. My name is Martin Kimani. I'm an Associate Director of KPMG, and we shall be beginning this webinar in about 2 minutes or so. Just so that we are also able to save time for those who've been able to join in good time. So we just give about 2 minutes and then we can start. Okay, good morning once again. I do trust that you can hear me very well. And welcome once more to our program today. We have got about 1 hour, 20 minutes to cover quite a bit of a topic that we have here. I am going to put up the program that will run in those minutes that we have. We'll try and make best of use of the time that we have with us this morning. Up on the program, I trust that you can see the program here. We have 2 items that you would like to cover. We have a presentation, which we would want to cover a couple of very hot topics, this being the digital transformation and cybersecurity. And then after that, we will have some practical feel in terms of what's happening in the market. We will get subject matter experts to come and share with us their real feel in the market of what is happening. And they'll be able to sit in our panel. We've got a couple of questions. And then after that, we can be able to move into Q&A. So to begin with, I'll just ask our partner, who is the head of insurance within KPMG, Alex Byod, to just give us a bit of opening remarks. And then after that, we can have Jared, who heads the transformation. He will talk to us in terms of the current perspective with regard to digital transformation within that space. Then I'll invite Precious, who will walk us through the presentation that she has on digital transformation. And then after that, we can have Anthony Moyoro, one of our associate directors, to take us through the cybersecurity. I'll circle back then after that to start with the panelists. So feel free to put up your questions as we move on, just as the basic rules to allow us to engage along. Because of the time, sometimes it becomes much easier for you to share some of the questions within the chat forum of your Zoom connection. So please feel free to put up those questions so that we can be able to address them even as we go along. You're most welcome, and I would then want to hand this over to Alex. Alex, you can hear me, please come up.
Yes, thank you very much, Martin, and good morning all. Thank you for waking up nice and early to join this session. So welcome, and we look forward to interacting with you. And the program is quite rich with material and insights, and I do believe that it's going to be of great benefit to all of us. Before I make more remarks, I would like to welcome our CEO, who has joined us this morning, Benson, to kindly just say a word and greet the participants before we progress. Benson, please.
About 2 things on this important subject. I think we all know the last 2 years have been full of challenges, but they have also seen accelerated digitization. So the topic for today is very, very relevant when you look at it from that context. the policyholder you have today, again, the level of loyalty that we have experienced in the past have come particularly significantly lower than what we have experienced before. Their patience is low because they measure your performance and your services against not just yourselves, but a broader business landscape in whatever industry that they are involved in. So when you look at it from that perspective, then it gives credence to the very involving transformation that you've been going through. And I know most of you have been going through that. So bring in new areas where you can introduce new operating models, and know most of you have done that. You have introduced new services because of digitization. You are now able to use data more than you have in the past. You can use it for to progress your underwriting business, acquiring of new customers in a manner that you could not do before. Making use of artificial intelligence, machine learning, which you could actually use in dealing with the risk of fraud in your claim section. So all these things are happening because of the new reality that we are in, and it's in a good way brings in new opportunities for the insurance sector. So I'm very excited this morning when we're discussing this, because the most important thing that come with it is, as you develop your digital roadmap, as you revolutionize your strategies, there is an inherent risk that comes with it, and that is the cyber risk, which makes this topic very, very relevant. And from what I can see on the screen, it's been tailor-made for the insurance sector, which plays a critical role in the transformation of our economies and social lives for our people in this region. So as you engage with it this morning, as you engage with the subject matter experts that we have put together, I would hope that you are excited as I am to listen to the issues that we should be looking at, that we'll be focusing on as we continue with our digitization in our operations. So I wish you all well, and thank you for the opportunity to engage with you this morning. Back to you, Alex.
Thank you very much, Benson. Thank you for those remarks. So again, we are very happy to interact with everyone. So welcome participants from across the region. When we looked at the people joining, we are happy to see that all the 4 or 5 countries in East Africa are well represented. So we have got participants from Kenya, Uganda, Tanzania, Rwanda, Ethiopia, and Burundi. And that's where we also serve our clients, escaping the East Africa. So we work as one firm, bringing clients together from across the region. And what I think I've seen, because I've interacted with this sector for quite a number of years now, this sector deals with common issues across technology, across regulation, across operations, and the risks are quite similar. Therefore, there's very little that is left to differentiate yourself, because you operate under a common market that is regulated in the same way by the regulators. And therefore, as Benson says, we have tailored this, and what you do as a participant is to pick this, and as you take it back to your organization for decision-making, you need to be unique in what you do, and perhaps try to do it better than your competitor, so that then you can be on the cutting edge. So technology, we are seeing posing a big risk, and it also brings quite a number of advantages. So we have seen some insurers in the market have advanced very much in technology. They have moved away from the traditional methods of underwriting, traditional methods of claims processing, even dealing with brokers and intermediaries has been a key area of transformation. And therefore, even as we give you insights and equip you on how to digitize even better in the middle of the risks that we are facing on cyber and other risks, we are trying to give you the value that you take back to your organizations. So I know I've interacted with most of you across the region at all levels, people dealing with different aspects of their businesses. The CEOs, I've sat in a number of CEO forums. And even as we talk about what the CEOs are telling us, because we bring some element of our CEOs affair and what we are seeing, this risk of technology has been put very high on the list, and is what most CEOs are currently dealing with and working through the structures that they have in your businesses to deal with the risk through the CIOs that we are seeing many of you sitting in this forum, through heads of departments, through CFOs, and therefore we will really look forward to you interacting with us to get the best out of this. So welcome again. We have lined up a number of participants in the panel discussion that bring real expertise from the sector and what they're seeing, and also our own people at KPMG that are dealing with you on a daily basis to give you insights. So without further ado, I would like to give now to the next presenter, Jared, our partner, to take from here. Thank you and welcome. Jared, please.
Thank you, Alex. Can you hear me?
Yes, I can hear you, Jared.
Excellent. All right. Good morning, everyone, and again, welcome to this session. Like Alex and Benson have indicated, this is important, and it's important to us as an industry in insurance, but also as technology practitioners. But let me just echo what Benson has said. We've seen growth in this in insurance, because generally speaking, insurance companies did not invest a lot of technology before, but we've seen, necessity coming in, and investments in technology have come through. But allow me to just step away and at the onset indicate that this is not purely a technology discussion. I believe that this is a business discussion, because when we are talking to the regulator, when we are talking to our clients or our customers, when we are talking to the shareholders, they are focused on different elements that become important to them at that point. And therefore, about digitization or digital ecosystem, or we are talking about cyber, the different stakeholders are invested or interested in what they can derive out of it. And therefore, the shareholder, the bottom line becomes important. And digitization of all process is therefore inherent, and we then have to look at it as a business discussion rather than a technology discussion. Because many a times we see this discussion and left to the CIO to to handle. But then I'm glad that this morning we have business leaders as well, risk leaders as well, because and CEOs, because we are saying that the bottom line is affected if we will not invest in digital, if we will allow ourselves to be cyber attacked and all that. And therefore I'm glad that we are talking about it and looking at it from a business transformation perspective, and not only from a technology transformation perspective. Now, as we go through the process, and you'll see that we have analysis that has been done from a global perspective, from a regional perspective. I think the question that as individual organizations in this webinar this morning, we need then to continuously ask ourselves, where are we in terms of maturity that we are talking about? Have we done an assessment in terms of digital maturity, in terms of our posture from a cyber perspective, where do we sit? Because therein lies the benefit that we can derive from such a webinar, where we go back and reflect and do something about it. And the question is, what shall we do with the information that we gather from a global perspective, but also from a regional perspective? And that's the seed that we must plant and plant and go forth with. And we'll be happy to walk that journey with you as we go through that process. So without much ado, and I know we have a lineup for you, let me pass it back to Martin, or straight on to Precious, to just walk us through the slides. Then we will get back to the panel discussions that we talked about. Right? Thank you very much.
Thank you, Jared. Thank you, Jared, and well put. Thanks, Benson and Alex as well. I would like to invite now Precious to just walk us through just some few slides that will allow us then to deep dive a bit more into the digital space. Then Anthony will also cover some few slides on cyber. Precious, are you there?
Yes, I am. Thank you, Martin. Can you hear me?
Yes, I can hear you very well.
Okay, good morning, everyone. My name is Precious Mongera. I'm a manager in our technology advisory division, focusing on digital transformation. This morning, I'll just take you through a couple of different elements around understanding digital transformation, data as an enabler for digital transformation, talk about a few of the insurer techs, which are accelerating digital transformation within the insurance sector, and then some key success factors to leave you with this morning. So I would like to start off by defining what is digital transformation. Different technology players define digital transformation differently. If I look at Gartner defines digital transformation as leveraging information and technology to enable new capabilities across the insurance value chain, optimizing, transforming, and creating new insurance products, services, business models, and business ecosystems. Similarly, IBM defines it as rethinking what customers value most and creating operating models that take advantage of what's newly possible for competitive differentiation. Here, they're looking at the customer and putting the customer first to see how far and fast you can go on your digital transformation journey. And then finally, Cognizant says digital transformation leverages information and technology to enable new capabilities across the insurance value chain, optimizing, transforming, and creating new insurance products, services, business models, and business ecosystems. But really the common theme that underpins all of these definitions is it's very far-reaching. It involves new aspects of the business, of new customers, new technology. It looks at how quickly can you scale at speed by putting the customer first and creating a competitive advantage within your business whilst leveraging emerging technologies. So with this definition, it's also important to know what the CIOs in insurance companies are seeing as the imperative for digital transformation in a post-COVID period. CIOs in insurance are saying that 20% of insurance companies believe their organizations are effective at pivoting and scaling digital channels to meet new customer demands and expectations. As you can see, this is a bit of a low percentage, so more needs to be done in that space. 60% of insurance companies believe that influence of the technology leader has greatly increased after COVID-19, and this is for obvious reasons, as has been mentioned. 50% or about half of insurance companies agree that COVID-19 has accelerated digital transformation and adoption of emerging technologies. These emerging technologies include artificial intelligence, machine learning, automation or robotic process automation, etc. 49% of insurers believe that security and privacy are the main areas where technology investment will continue to increase. This is only going to grow as more and more insurance companies get into the digital landscape. 52% of insurance companies believe that scaling data analytics is the most important priority for their organization's data strategy. And we'll talk more to this in this presentation. And then finally, 63% of insurance companies believe a skills shortage is preventing their organization from keeping up with the pace of change. Skills is a big one. This is a huge percentage, over 50%, and the pace of change. So the scary fast increase of technology within the insurance sector is also making insurance companies apprehensive. And so when we talk about some of these insights, it's also important to note that the digital adoption levels are still low amongst insurers within the East African region. We find that we predominantly fall around on the left-hand side of this screen, where we're generally between level 0 and level 2 of adoption. When we look at level 0, for example, there's no formal digital strategy, absence of digital leadership. Perhaps there's no digital officer, chief digital officer within your organization, and you don't have any digital KPIs, so you're continuing with the status quo as you have done in the past. If you're at the embryonic stage, maybe perhaps you're thinking about a digital strategy. This digital strategy is not part and parcel of your business strategy. 1 or 2 KPIs on digital, and if you've made any digital adoption, it's very much in silos and is not fully integrated into your enterprise. On the beginner stage, we find that, okay, some progress has been made, some limited digital revenues, perhaps you've automated one area of your business, but there's still considerable amount of legacy, whether it's legacy systems, legacy technology infrastructure, and some more work needs to be done to focus on other aspects of the value chain. So as a region, we generally fall in this scale, but there's hope, because we see a lot of our global counterparts progressing all the way towards level 5 to be digital leaders within the insurance sector. We see at an intermediate stage, they've put in digital leadership has been established, at least to work and guide on the digital strategies in the organization. Moving on to the progressive stage, there's significant digital KPIs framework. There's a strong digital value proposition. You've identified areas within your business that you're going to automate and digitize. And to be a digital leader within the insurance space, you have to have an enterprise digital first strategy. Your digital strategy is fully intertwined with your business strategy. And as an organization, you call yourself digital first. There's agile innovation management, sophisticated multiple channels that are digital as well. And so it's important to take note of this, to say that there's some more work that can be done, and we'll be able to take you through some of the steps you can take as a first step. The reason for this slow adoption can be attributed to a number of different challenges. On the screen, we have the 2020 CEO Outlook, COVID-19 Special Edition, and we're able to pull up on some of the reasons for this slow adoption. 39% of the CEOs say that there's lack of insight into the future operating scenarios. 29% say there's great difficulty in making quick technology-related decision. The thing about technology and digital adoption is it doesn't wait. It's now, it's yesterday, it's not in a few months' time. So that ability to make quick technology-related decisions is a challenge. 14% say there's challenges in moving from pilots and experiments to scale deployment. It's good enough to have your innovation hub, your innovation lab, but are you scaling this across all your customers, countrywide, nationwide, or continent-wide? 11% say there's no coherent view on technology trends on which to act. And finally, 7% say there's a lack of skills and capability within the IT organizations. And I'm sure a lot of you on this call can relate to these challenges within your organization. But even with these challenges, it's always important to note and keep top of mind that therein lies multiple benefits from digitization. If you're looking to grow your customer base, it's noted that there is great speed to market through partnerships. The InsurTechs are the new technology startups within the insurance industry who have thought greatly about technology. And so if you as an insurance company don't have, perhaps maybe you have a legacy technology infrastructure, you can look to partner with those who have thought through this and be able to scale your market and your customers a lot quicker. There's improved enhancement for your customer experience, and the more your customers enjoy the experience of interacting with your insurance company. They'll be able to make recommendations, and you can then grow your customer base as well. Efficiency in the underwriting process, which I'll talk more into detail a little later. Great productivity for your sales team. If they can focus on what's most important, which is selling, rather than filling in multiple forms from customers, making sure they input into one of the systems that you have, taking away those manual elements and those time-consuming elements and having them be very productive in their sales process. And of course, with automation and digitization and adoption of technology, you're able to reduce on cost not just on manual labor, but cost more so on the time taken in completing manual tasks, and your teams can now focus on what's most important. And then claims efficiency as well. If you're able to have an effective claims process, have digital claims, this can greatly provide benefits to your organization. And so what are the key trends now that are shaping the digital transformation space within insurance? KPMG has worked with a number of our clients, and we have discovered that there's multiple trends in this technology space, but some key ones we'll be able to note below. Distribution diversification, where we are finding that there's multiple channel customer focused distribution within the insurance sector today. Apologies for that. We're also finding that aggregators and affiliate channels, if you're able to aggregate data quickly and easily from your different customers, you'll be able to scale your customer base that way. Direct to consumer channels has increased. So consumers are able to directly access your insurance portals without going through agents or brokers. We're seeing that a lot more. And then a single view of the customer for agents, and not having multiple either paper-based documents or multiple systems all talking to a single customer. If you can have a single view, you're able to make quicker and faster decisions. Data and analytics, as has been mentioned, data is really at the core of digital transformation. And so if you have data, you're able to get some more insights into fraud prevention, because you're able to see trends on the key fraud elements that occur year in, year out, and therefore you're able to present it. Personalized on-demand insurance, because you have more data on your customer, you're able to make the experience more customized, and then your customer will feel like the insurance company is thinking very closely about them and about their needs, and they'll be able to stay for a longer lifetime. Diagnostic and predictive analysis, with data, you're able to diagnose and get insights into your data quicker and faster and then you're able to identify any blind spots that perhaps you wouldn't have noticed in your paper-based systems. Underwriting supported by behavioral data analysis, and also Robo Advisors. Robo Advisors talks to using an artificial intelligence engine and the data that you have from your customers to predictively respond to your customer queries. A lot of you may have interacted with perhaps Zuri from Safaricom. That's an artificial intelligence engine, and something similar can happen within the insurance space where you have your Robo Advisors. Digital innovation is really key, a key trend that we are seeing. Mobile first strategy is very key. If your customers are able to interact with you, whether from a claims or onboarding perspective on mobile, we know that a lot of our population within East Africa is very youthful. So a lot of them will have probably interacted with applications on mobile first before the computer. New integrated customer and agent experiences, innovative strategies, replatforming, and moving away from legacy systems. Now, this one is very important because legacy infrastructure can really hold you back from adopting new technology. Legacy infrastructure may not be able to run data models or artificial intelligence models because it's quite old. So you have to look at replatforming and having a new technology architecture. And then finally, in digital innovation, we have claims automation. If you're able to automate a lot of your claims, whether it's uploading a picture and having it image processing with artificial intelligence, you're able to quickly identify where the issue was, and you can perhaps compare it to a before pictures to be able to identify that this claim is valid. And then finally, on emerging technology, there's a big shift to claims prevention, leveraging Internet of Things. Internet of Things leverages sensors and putting sensors on different material items, whether it's a car, whether it's a fridge, whatever element, and having that data continuously collected so that when you need to make a claim, you have data from the past to show that indeed there was a blip and there was an issue that did occur. AI-driven underwriting and claims processing within the emerging technology space, and also the use of blockchain or distributed ledger technology in order to counter fraud. With these key technology trends, what is really important to understand is that data is at the core of digital transformation. There's a significant shift in the position of data within the enterprise architecture. Data is actually recognized as the core of any successful 21st century enterprise. And it's important to leave with this in mind, because focus on data management and governance is really key to make sure you're making quality data accessible and available for business applications, for business decisions, but also whilst managing risks. And we'll talk about the risk element in the cybersecurity portion of this presentation. But in looking at data, therein lies a lot of opportunity as well. You can focus on dynamic pricing and having pricing that is tailor-made to your customer. Why? Because you have data insights into what your customer needs are, what their preferences are, and how much they spend, whether it's mileage on a car or their behavioral habits, and get customer lifetime value from this. I talked earlier about AI-driven insurance fraud review and also self-service analytics. And this analytics is not just for your customer, but also for you within your organization. Can you quickly have a visual of how you're performing, how your customer base is growing, which customers are leaving and the reason for them leaving? And that kind of self-service analytics should be available and accessible to all levels within your organization. And so on this screen, I just want to get you to think and reimagine a certain process within the insurance value chain, focusing on underwriting, and reimagine it from a digitization perspective, or the underwriting process of the future. From research, we believe that the underwriter of the future will be that of a collaborator of the end-to-end process who completes policy decisions faster, accurately, and cheaper. And so what we have on the screen is the full insurance process. If we start off on the left, we can see that customers will be able to interact with the insurance virtually through virtual agents, and also from the traditional channels using agents, bancassurance, brokers, call centers, but also from third-party sources, whether it's smartwatches, smartphones, mobile applications. All of that data will be aggregated, and we'll have smart data aggregation to understand information on the customer. At that point, we'll be able to predictively model the risk and accurately have a risk calculation based off of predictive modeling. And the reason for that is you have a whole wealth of data, you have your data models fully in place, and you can automatically do that within a few moments. Moving down on the right, after analyzing the risk, you'll be able to get automated quote generation and premium generators using some cognitive abilities. Cognitive means human-like understanding using machine learning models. And at that point, after you've generated the premium, you'll be able to issue the policy to your customer. And all of this can all be done on a website somewhere, on a mobile app. And in giving the policy to your customers, this can also be done intelligently using a virtual agent or a Robo Advisor, a robotic advisor. But in the middle of all these processes that we've talked to will be the role of the future underwriter. The underwriter will be able to attract new businesses, retain policyholders, and identify cross-selling opportunities by plugging into each of these different sections. The underwriter will be able to validate the accuracy and completeness of underwriting information whilst understanding the organization's relative position in the marketplace. Why? Because they have insights on the data and are able to calculate risks and model these predictively. And insurance pricing and identification will be very much with technology at the core of it. And you can find that this process can actually take just a number of minutes on as I mentioned, on a website somewhere or on a mobile somewhere. So reimagining this might seem quite futuristic, but it is happening now with our global counterparts, and some different organizations in insurance are greatly thinking about how to get to this stage. And so important when we talk about insurance is also to talk about insurer tech. Insurer tech, as I mentioned, are the technology startups within the insurance sector, and we've seen that grow greatly within Africa. On the screen, we have a Britta Bridges report, just talking about some of the insurer tech companies out there, and we see a number within whether it's East Africa, West Africa, South Africa. Some of them are positioned not just within one region, but span across different regions as well. And so this is a snapshot that you'll be able to review as well as we send over this deck. But I wanted to just highlight some of the insurer tech companies within the East African space. And the reason for this is we mentioned earlier that you can accelerate your digital transformation through partnerships. And KPMG has worked with a number of different insurance organizations to walk this journey with you and how that partnership will look. Just to talk to a few, we have Lami, which is an insurtech company in Kenya that works via an application programming interface. It allows businesses like banks, startups, and organizations to offer digital insurance products to their users. So because they already have an API in place, which is the key method of plugging into organizations from a technology perspective, you're able to quickly scale your market share and speed to market using some of these insurtechs. Griffin is Kenya's first digital-only insurance company where everything is done on the mobile app. So the whole process that we talked to earlier can be done for car insurance on a mobile application. Just to highlight, Tumo Oko provides crop insurance using new technologies in satellite imagery and weather forecasting to simplify and automate the claim management, and thus low-cost crop insurance for smallholder firms. We know agriculture is really big within our region, and we are seeing some insurtechs looking into the crop insurance space. And finally, just to highlight Vitality. Vitality is a rewards-based insurtech health insurance company that's leveraging big data and Internet of Things. When we talk Internet of Things, we're talking about smart wearables, whether it's a smartwatch, whether it's a mobile phone, picking up on your jogging data, and then at the end of the year, you can get a discount off your insurance premium. So a lot of work is being done in this space within East Africa, within the East Africa region. And so as I summarize, it's important to know that balancing transformation ambitions and the enterprise impact is also a key element that we find that insurance organizations might be struggling with in terms of selecting suitable approaches for your digital transformation. And so there's 4 key archetypes that you can look at as a digital insurer. You can either look at your transformation ambition or the enterprise impact, how much is going to impact your enterprise. On the top left, you can choose to create your digital new company. You can create a whole new digital company, which is a digital first insurer that's leveraging modern technology and operations and technical talent, creating products that will go to market faster and address risk at a more granular level. Or you can choose to take the option of asset-light innovation, where you address specific operations through market experiments, leveraging new digital tools. Examples would include creating digital storefronts for agents or digital claims interactions. Digital claims is also a good first starting point that a lot of insurance organizations take as they go about their digital transformation journey. Moving towards the right, we see that you can also have capability enhancements, modernizing distinct functions within your organizations, whether it's finance, whether it's billing, or different cooperations, whether it's claims, whether it's underwriting, to enhance different efficiencies and better leverage data and create differentiated capabilities. And finally, you can have an end-to-end enterprise transformation where you see that your organization is digital first, you modernize your core technology infrastructure, you modernize your operations with digital first, and also change your talent to enhance operating and business models. And so to close, I want to leave you with key success factors from digital insurance leaders. What can you do as an insurance organization and your CEOs, CIOs, and everyone within your organization to supercharge your digital momentum? The first thing you can do is change your organizational culture in knowing that digital is key and a key driver for culture transformation. The success of a digital transformation initiatives will depend on how right your culture is. It's not enough to have a digital claims process, but still taking the manual digital claims because your organization has not adapted to these new elements of digital. Move your technology to platform-based. I talked about legacy infrastructure. Thirdly, partner with different players within the ecosystem, whether it's technology, insurer tech startups, in order to fast track your scale. The fourth is consider how you can use new technologies. Think about all the new emerging technologies and see how they directly apply to insurance. And as KPMG, we've worked with our clients in order to be able to identify this, and we're able to do that as well for you as insurance companies. The fifth would be challenge existing company structures. You need to be able to challenge the existing norms to transform faster, break down silos, traditional processes, eliminate bureaucracy. Maybe there's only one person within your organization who can approve something. You can get into a system somewhere and have it automatically approved based off of data insights. So being able to challenge those existing structures is key. And finally, your people. To support new technologies, you have to invest in new skill sets, invest in the skill sets of the future, and have the right people on board who can help you realize your digital ambitions. Thank you so much for listening. I'll now hand over to Anthony to take us through the cybersecurity understanding. Thank you.
Right. So thank you very much, Precious. So please confirm if you can hear me, Precious.
Yes, I can.
All right, excellent. So ladies and gentlemen, thank you very much. I'm just going to follow from the cue that Precious has actually given, particularly just to bring the aspect of cybersecurity. And she's given a very, very good intro, particularly where digital transformation is important in insurance. As we know that basically this dispensation that we're in, digital is a driver of businesses. And when we talk about digital transformation, we have to focus on the key crown jewel that we look at here, which is data. So one of the biggest risks then becomes cyber risks, particularly when you look at the risk radar in this technology dispensation. Now, what I'm going to take you through is I'm just going to give an indication, mention a few case studies of some of the cyber breaches we've seen, particularly within the insurance sector. I'm also going to give some insights from a local perspective. We did a survey, an East Africa CEO Outlook, and I'm going to share some of the findings that we were able just to uncover based on that. And then I'm also going to talk about some of the cyber threats that, of course, you need to be concerned about, and what are some of the things that you need to do basically just to position yourself to be more cyber resilient. And I'm going to mention particularly the shift from just cybersecurity towards now cyber resilience. And then lastly, what are some of the concerns that you also need to have top in mind, and what do you need to do just to be able just to fortify your enterprises? So allow me to start by setting the context and just to mention that we've had, of course, some of the cyber breaches that are in the public domain that we can make reference to, particularly just to bring home the messaging of why this is important. Recently, we saw FDIC, which is Federal Deposit Insurance Corporation. They had a breach which hit 44,000 of their customers. And basically what happened is that data was ideally extracted from their company, because this is what normally some of these cyber attackers and some of these actors normally target. CareFirst, another insurance company, lost 1.1 million customer data to some of the cyber attackers. And of course, this was a big hit for them because it later on costed them, particularly from, they had a lot of lawsuits going on, but directly they lost a lot of money from that incident. And then Primera also was exposed, and 11 million customer medical and financial data was lost to some of the cyber actors. Now, let me mention that when you look at the insurance sector, it's very heavy on data. The data that you collect from your customers. And the nature of this data would ideally be defined as personal identifiable information, or even this would be sensitive data, things to do with medical history, medical data, particularly information about your customers that ideally would be defined in that broad spectrum. In Kenya, we now have the Kenya Data Protection Act, and it has clearly also defined the kind of data that organizations now, particularly in some of these sectors, need to always ensure that you have the requisite and effective controls just to make sure that they're protected, because there are implications. If this data is lost, you as an organization, of course, there's some fines that have also been imposed by the act, but also when we look at the long-term impact, you'd look at reputation impact, you'd look at also financial, direct and indirect financial costs that you may have to this effect. Now, when you talk about the impact of a cyber breach, I want to also mention a very, a popular case study that we look at. And this is an American insurance company that's called Anthem. So what happened is that Anthem had a series of phishing emails that was ideally sent to the employees. So some of the employees ideally launched this email, so they opened it up just to also bring the point home that your weakest link most of the time, if not all the time, is your human factor. Because some of the phishing campaigns are normally crafted just to deceive and to be able just to lure an unsuspecting user just to click on that. So what happened is that in this case, the users were able just to open that file, that email, and the malicious files were able basically to detonate, right? So this gave the hackers access to the environment. So as a result of this, many systems, or rather many servers and computers were ideally infected, and they were able to extract a lot of data over a period of time. On average, the number of days it takes to detect some of these attacks would be like 206 days. That's according to research. So what you normally see is that normally some of these hackers would be very stealth, and they'd want to keep a low profile while they're extracting this data. So as a result of this data breach, it ideally costed them immediately $260 million USD. Now, in actual sense, maybe just to define what this entails, this was ideally the cost that was attributed to the remediation, as well as they also had a long-term cost from this breach, which was coming to around 115 million. Now, according to a research that was ideally done by one of our alliance partners, IBM, the cost of a data breach, currently the global average cost of data breaches is $4.24 million. And that is a global average. And 38% of this amount is ideally attributed to the loss of business, because trust is a currency of this digital dispensation. If your customers do not trust you, then of course, ultimately, and what we've seen from some of these cyber breaches, they normally end up going to, your competitor or the other organization. And 29% of this cost ideally would be related to detection and escalation. And these are now the direct, immediate costs that you'd incur. And 27%, these are now the post-breach response costs that you ideally would have. And then basically the notification would be like 6%. But the main thing that I want to point out here is that loss of business will always be the biggest, particularly in this case, share of the cost that ideally you'd have, because you really want to be competitive. And when customers perceive you not to be taking the right measures to safeguard their data, then it's inevitable to have customer attrition and losing them to your competition. Now, to this effect, we also did a survey in East Africa. In our KPMG 2021 Outlook survey, we wanted to find out, and particularly when we talk about cybersecurity as a major threat of growth to any organization, we wanted to hear what CEOs and what leaders of organizations think. 79% what ideally told us is that protecting the ecosystem, particularly when you talk about third-party and supply chains, is nearly as important as building their own organization's cyber defenses. To bring this home, it's important that we understand that you may be secure as an organization, but your third party might be able to expose you. So having that end-to-end protection becomes very key. 75% of our respondents say that a strong cybersecurity strategy is clearly and critical to engender trust within their stakeholders, because you have to approach cybersecurity from a strategic and having the forecasted measures that you need to have in place. And what we've seen over the years is that cybersecurity has to be driven from the very from the very top, because the tone has to be set. So an effective strategy would ideally help you even fortify in terms of and have very intentional initiatives that you'd ideally be able to undertake. And 70% of our respondents say that they are well prepared for a future cyber attack. Now, there are only two types of organizations. Some that are being hacked and the other ones who haven't been hacked. And what we're seeing also is the move from just cybersecurity to cyber resilience, where cyber resilience is a question of how then should you assume the position that one day you're going to get attacked. Do you have the defenses to contain, to respond, and also just to be able just to recover in the shortest period of time, and ensure that your organization is able also just to operate effectively. And according to researchers, and this is by Checkpoint, financial services and this would ideally cover insurance, and banks would ideally account for the top 10 most targeted industries by threat actors. And of course, the inherent risks and the inherent motivations would be very clear, particularly when we talk about the profile of some of this the anatomy of a cyber hacker. The economics are normally the biggest motivator, just because they can monetize either data or they can directly be able just to steal from an organization. And what are some of the cyber threats that we are also seeing that particularly are facing the insurance sector? The first one is cyber extortion. And here's where I'd mentioned where we'd be having instances of ransomware attacks. And particularly from the year 2017, we've seen this escalation and the different variants of ransomware. Why? Because they've ideally cracked the business model. The way it is that they're able to get money from some of these organizations who they're able to steal data from. So this ideally is going to continue. So one of the things that we are saying is that organizations need to have very effective BCM and resilience arrangements so that they safeguard their data, just to avoid that. And as a rule of thumb, never ever pay for ransomware. Why? A ransom will ideally encourage this behavior. So we always encourage our clients, don't pay for these ransoms, but rather make initiatives just to ensure that ideally you have the right controls in place. Even when it happens, you can always recover back. And then loss of confidential data. This is important. Like I mentioned earlier, when attackers are hacking your environment, there's something that they're looking for. It's either data or financial reward. And particularly when you lose your data, many things can be done to it. So one of the primary motivations would be that. And one of the impacts that would face as a sector is a loss of confidential data. And then of course, we are now moving towards this highly innovative threats, which is now automated threats. And we've seen even instances where they're now leveraging on innovative technologies such as AI, machine learning. In fact, there's a time I was doing a research and I had this malware that was able to read your behavior and pretty much be able just to analyze how your pattern of life within the internet would ideally be, because they want to be very, very stealth so that they can be able to achieve their objectives. So we have credentials cracking where they try to access your password, vulnerability scanning, and all manner of tools that they're also now using. And then the last one would be reputational damage. Like we mentioned earlier, you want to really protect your brand. And one of the key ways you do it, particularly in this digital age, is to make sure that your policy holders really trust that you have the right security controls to make sure that, you know what, their data has ideally and adequately been protected by the insurer. So one of these things that we can also see is that the loss of confidence would ultimately lead to loss of trust in your organization. So now, when we talk about the threats, we also need to look at some of the concerns, particularly from an insurance sector perspective. Now, the first one would be an incomplete overview of the IT landscape. One of the key things that we've seen over the years, particularly when we do some of these assessments, is that some organizations really don't understand their IT landscape. And this is where shadow IT also comes in place. You find that maybe the inventory that you have of your assets would indicate that you have a number of assets, but in actual sense, the users are using more tools and more technologies than what you need to have. So having an understanding of the landscape becomes very important, because you cannot protect what you do not understand. And the second concern would be inadequate control processes, particularly regarding the user privileges. Now we are in a dispensation where security has to be tied to identities. And when we talk about identity-led security, you need to really ratify and look at what are some of the privileges that the users have. Do you do assessments just to understand, is it commensurate to what they have, is it commensurate to what they're supposed to do? And if at all you have excessive privileges, then you need now to recalibrate it so that you reduce the risk of having people with more responsibilities, or rather more privileges than they need to have. And then insufficient participation of senior management. Cybersecurity has to be driven from the top. So when we talk about awareness, we need to also start and look at it from a top-bottom approach, where senior management board will have a very good understanding of why this is important. They'll be able just to even support and invest in some of these initiatives, and then we roll it across the organization. Everyone from the boardroom to the shop floor needs to have and needs to participate in this conversation. BYOD policy management. When you have users coming to their with their devices, what are some of the security controls you have in place? And then reputational damage, particularly in the instance where a data breach might happen. What are some of the initiatives or interventions that you have in place to manage the reputational damage should it happen? And this is where you need to have a crisis committee, or rather crisis management team, that is going to be looking at this end to end. And then the last one is insider threat. Like I mentioned, the enemy within is the most dangerous. Why? Because they have a very good understanding of the landscape. They have a good understanding of the controls. So they're able basically just to circumvent these controls effectively. So those are the key concerns that we can summarize, particularly for insurance companies. And that is why we are now advocating particularly for cyber insurance. And this is also a risk management strategy where you need to transfer this to a third party. Now, where it's not possible, particularly in this instance, to be 100% secure from a cyber attack, and we've seen this, there's nothing as 100% security. It's to the degree of the controls and the defense mechanisms that you've put in place that will show that you've managed and minimized this risk. There are also consequences that can still, be able to occur. And one of the things that we also advocate is that ways that businesses need to work with the insurance to prepare and mitigate cyber threats. In this instance, why we're saying that you need to consider cyber insurance is you need to understand your company's risk profile. Understanding is very key. Visibility is very key. You need to also evaluate both and current future threats. And this is context awareness. You need to also look at this from always assuming that some of these cyber threats might end up in your environment. And then, of course, promote an enterprise-wide end-to-end cybersecurity culture. The behavior has to change. How people respond and how people behave, particularly in the, when we're talking about engaging with the digital assets. That has to be driven from a culture perspective. And of course, engage the right people and the cyber professionals that can really help you do this. Because of course, as insurance companies, it's not in your business. It's not the core business to focus on this. So getting experts and individuals that can ideally help you drive this momentum would also be very, very important. So when we talk about cyber resilience, what is the most effective way to drive a cyber resilience program? And we borrow a lot from NIST, and NIST is a globally accepted standard for cybersecurity. And the first thing and the first pillar in NIST is normally identify. You need to understand who your enemies are. You need to also understand what you have in place in terms of security and what are some of the governance arrangements that you have in your organization to be able to drive this behavior effectively. The second thing is protection. And this deals with the capabilities and the preventive measures that you need to have in place just to safeguard yourself against a cyber attack. And we don't stop there. We go to detection. In fact, a recent study was done, and it said that when you detect a cyber attack, the cost of that cyber attack immediately goes down. Why? Because once you detect this, you're able now to invoke the right interventions just to minimize the damage. So when you have capabilities to enable and to give you situational awareness, you're able also to have the early warnings and have also to be able to detect the indicators of compromise. When you do this, some of these technologies are going to help you respond effectively and respond, using the right way and pretty much be able to manage this risk. And then responding is now the other pillar, and basically is a question of how then are you going to contain this attack and how you're going to respond to it. If there are any negative impacts, reputation-wise, cost-wise, what are some of the things that you need to have in place so that you can be able to do so effectively, and also to just inform your future capabilities. And the last one is recovery. And recovery deals with how you're going to recover your business operations to normalcy, because most of the times, like we mentioned, cyber resilience is a question of always assuming the fact that you are going to get attacked, so you're ready when it happens. So not only are you protecting yourself, but you've designed your systems to be resilient, that when this happens, you can contain a cyber attack, you can respond to a cyber attack, and you can recover effectively and efficiently. One of the prolific authors, Sun Tzu, says that, in the art of war, when you have a very good understanding of your enemy, then you're able to inform your approach to how you fortify against them. So the learning is very, very key. And there's always an opportunity to learn from some of the cyber attacks so that in the future, you're able to be more resilient. Now, some of the security trends that you need to also consider is managed threat detection and response. And this is where we talk about MDR. And particularly as a solution is focused on offering incident detections, containment, and also response services. And like we mentioned, this is one of the guaranteed ways that you can be more cyber resilient and also be able to prevent known and unknown attacks. And then of course, data security governance framework, it's very, very important. You cannot protect what you do not understand. So one of the key things that you also need to do is have an end-to-end understanding. What is your data? What kind of data do you have? How does data move in your environment? What is the life cycle? Data in rest, data in use, data in storage. You need to understand it very, very well. And then of course, this ideally needs to be anchored by a data security governance framework. And of course, it's going to help you even predict and have simulated scenarios. When certain sets of data, if they're breached, what will be the impact to the business? You need to have that in clarity so that now you're able also just to reduce the costs of some of those attacks where you apply commensurate controls to it. And then of course, having an EGRC solution is very, very key, because it's going to give you a single framework that you're able to coordinate some of the security policies and controls, and then you're also able to map them to regulatory and internal compliance requirements. And then the last one is security DevOps. And this is where we talk about security by design. Because security should not be a bolt-on, but it should be a built-in. Particularly when you're building systems, they need to be built with security and design. They need to be built to be more resilient by design. And having a SecDevOps framework will enable you to do this. And you need to have visibility of some of these requirements at the very early stages. When you're building a new system, when you're building a new software, in that SDLC, software development life cycle, some of the security imperatives need to be tracked, need to be put in place so that the end product is going to be a more secure and a more resilient system, and if you may, even infrastructure. So, as I conclude my last slide, what are some of the key success factors that we can say that are going to also help boost digital security, particularly in the insurance sector? The first one is assessing your defense capabilities. Awareness is very key, because you need to understand where you are, particularly in that quantum of maturity. What are some of the cyber defenses that you have in place? How secure are you? How effective are these controls? Have they been designed adequately? And particularly when we talk about containing or other high impact attacks, it's very important that you have an internal, but also an external perspective to that effect. And this is where you need to conduct effective vulnerability assessments and penetration testing. You need to conduct red team assessments, attack simulations, adversary simulations, so that you can understand how you're able to respond in a real life attack. The second one is investing in early detection. Monitoring is very, very key. Thwarting a potential attack is pegged on how effective you're able to detect it when it's happening. And again, it's critical to diagnose this early so that a cyber attack will not go unnoticed for weeks. Like I mentioned earlier, the average days to to detect a cyber attack is normally 206 days. You really need to shorten that time to make sure that you do this effectively. And then the third one is making cybersecurity everyone's job. It's everyone's responsibility to do this. And even awareness, particularly from your customers, where they're also using your digital channels. You need to ensure them that you need to also give them awareness and training. Your internal staff, they need to understand this. Everyone within the organization, they need to understand the potential dangers and what are some of the indicators of some of these threats so that they can be able just to avoid making some of these common human mistakes, such as disclosing client information and also responding and falling prey to some of these social engineering attacks. And then, of course, cyber incident response would ideally cover that. And the last one is learning, because all cyber attacks normally help us build arsenals of defense going forward. So we need to learn from the past and evolve and innovate so that we can also now be able just to build effective strategies going forward. So, and conducting maturity assessments is very key. And one of the ways we've been assisting our clients is that we help them walk this journey where we conduct an assessment for them, do a diagnostic, assess their maturity, benchmark them against their peers, and really help them drive initiatives going forward in terms of what are some of the interventions they need to have in place to be more secure and to be more cyber resilient. So, ladies and gentlemen, I think that's it. Basically, from us, particularly from a cyber security point of view, those are the salient areas that we feel are very important for particularly the sector players to have visibility and to be cognizant of. So I'm going to hand it over back to Martin. Over to you.
Thank you so much, Anthony. I know we had a bit of a limited time, but you have given it justice. And I do believe that we have been able to get a good understanding and a feel of the connection between the digital transformation journey that you want to undertake and the cyber risk that comes along with it. We become more vulnerable the more we open up to the outside world. But again, we don't have an option in terms of to what extent do we open up our engagement point with our customers. The technology is to allow us to be able to serve even a bigger space. And for us to be able to do that, then we must find ourselves then creating an open field to engage more with our customer. That comes along with a lot of risks. And therefore, we have then to appreciate. I keep seeing a lot of questions that touches on how do we then help our users, our employees to become more sensitive with the risk that comes along with this technology. We underplay that a risk that has been coming in as a result of how we are using technology, that we don't understand our asset very well. So there's a conversation that needs to happen to help our people even within our risk framework. Now, allow us to move on to the next section. I see our time is running, and I would want to then move to the panel section, whereby we are then going to share some of the perspective and hear from our panelists. And just to bring them on board, I would like to welcome Carol Masiko, who is Director, Risk and Internal Audit, Britam Holding. Carol, if you do not mind approaching the stage, in essence, just putting up your video. I would like to bring also Dr. Eli Rehema, the MD of National Insurance Corporation of Tanzania. Dr. Ari, I do hope that your video, yes, and you can put up your mic. I see you're muted. And last but not least, we have Eric Kisaka, the Risk and Compliance at Equity Life Assurance. And we have put this team together from the perspective, yes, Eric, you can see you, and good to see you this morning. If you don't mind unmuting your mic. So we will just jump right into it. And to begin with our conversation, the way we had put this together is to try get a good feel from a business conversation. As Jared mentioned from the beginning, digital transformation and cyber is not just a technology. It's also a business conversation. It's actually largely a business conversation because we are saying that technology is going to be at the heart of it all. And therefore, as we begin, I want to put this question to Dr. We have compared, and from much of our conversation across the financial space, insurance included, we have noted quite some significant gap in terms of what extent of level of adoption of technology that the insurance are doing across their front office processes. And by front office here, I would be referring to processes that really engages your customer, be it when you're looking at the onboarding process, sales and marketing, and underwriting process. And then the back office processes also talks into your operationalization processes and the automation of the processes that support your business in terms of its running. So this could be your claims recovery processes, the salvage, and all those, and risk and compliance. There's very limited use of technology, and those actually opens up to more opportunity for digitization. Dr. Ari, what's your perspective in terms of these challenges? Why has this space been quite not, if you look across in terms of the demand of the market?
Yeah, thank you very much, Martin. As Benson rightly put in his remarks, we usually tend to not to put customer at the center of what we do. We tend to think from inside. We don't have an outward focus on that. We need to engage a customer more. We need to understand their behavior, and also we need to have these processes not to work in isolation, because in most cases we tend to have a front office on its own, yeah, and the back office also on its own, so they don't communicate. At the end, it really brings inconvenience to customers. So the digital transformation give us that a connection between between what is happening at the front and what is happening at the back, because from the customer point of view, it is very inconvenient when you're looking for a service and you get to be asked questions for the information that you believe that the insurer has in their possession. Very true. So I think if we can put more emphasis on ensuring that we focus on the customer, we become more obsessed with the quality of service. Then I believe that with the digital transformation that going on, particularly after the COVID, we will have the effect that is expected.
Yeah, thanks, Dr. Ari. Therefore, it means customer at the heart of it all, being enabled by the technology. That's what I am getting from your point of view. And to get to the second question, which then ties that closely, is the question of, we do not need to reinvent the wheel when it comes to reusing some of this technology. There are organizations that live, breathe, and eat building of new nimble technology and making use of emerging technologies. And the reason I would want then Caro to maybe share her perspective on, do we have space to take advantage of InsurTech? Are there benefits that you would see that would emerge by using InsurTech in the insurance space? Precious mentioned that they have started the journey. The question for me is, what's your perspective with most of our insurance companies in Kenya where InsurTech sits?
So thank you for that, Martin. I hope you can hear me.
Yes, I can very well. Thank you.
Excellent. So just picking up from where Dr. Ari left off, from our experience, and I'll speak from a Britain perspective, because we have been grappling with this issue of putting customers at the center of everything that we do. As COVID has thrust all insurers into the technology and digital transformation space, the one thing that became very apparent is that customer expectations had gone very high. And as insurers, we were falling very short in terms of delivering a good digital experience to our customers. And so what we realized very quickly is that the next differentiator for us as insurers is a quality digital experience. And as you said, there's no point in reinventing the wheel. And what we did is front and center within our strategy was to develop a partnerships and digital division, that was then seeking to explore ways to integrate, leverage, and partner with other insurtechs or partners who can deliver digital platforms that would help us leapfrog into the new sector. So I can speak through 3 types of partnerships that we've actually experimented with, which have beginning to bear a significant fruit. The first one was in the health space. We partnered with a mobile-based health ecosystem company to develop a product called MTIBA that leveraged on mobile technology to provide access to inpatient and outpatient healthcare. And what we were able to do is, without too much additional cost for us, by leveraging on this partner, we would get access to 4 million customers that would then have a much better enhanced experience for healthcare. They'll have transparency, seeing their benefits and managing their healthcare, both inpatient and outpatient. The second one we partnered with is Little Cabs. So they're not your traditional insurtech, but they had a mobile app. And we realized that there is an opportunity to provide personal accident cover for all the riders of Little Cabs. So here again, we're integrating with an already known tech company that provides a service driving a mobility service, and we're able to tag on personal accident cover for them. In addition, because of COVID, we had an opportunity to co-create with Little Cabs and provide a COVID cover that would enable anybody who used Little Cabs and acquired COVID within 10 days of using it to access telemedicine, as well as access a healthcare kit that would help them through COVID. And the third one I'll talk about is a partnership with Telkom, where we're able to provide and embed insurance into the buying of airtime. So you see, through those 3 small partnerships, we've been able to access a whole new segment of consumers who haven't had prior experience with insurance. Number 2, we've been able to achieve frictionless onboarding and servicing of insurance claims to our customers. The third thing, we have looked at a new and innovative way of delivering conventional products. So personal accident is not a new product, but we've delivered it in a very different way. And then I think for me, the most exciting part is we've been able to improve people's first interaction with insurance. If you think about it, traditionally, the first time somebody comes into contact with insurance is when they either buy a car or when they're employed and they're offered healthcare. And many of those have very significant points of friction. So we are introducing customers to insurance in a new frictionless way through these partnerships. So I can say that there are very many benefits from leveraging on those partnerships.
Very well put, Carol. And indeed, collaboration and alliances are the new frontier for competition. I wouldn't have made it sounded any better. Now, Eric, a quick question for you, and ties closely, I know Daktari mentioned on this. As we even look into preparing all these products, the use of technology, getting better at how we prepare products, we still see quite some bit of rigidity in terms of the product that we issue to the market. And actually, luckily, one of our participants, Austin, raised a question, and part of the answer was on the idea of how flexible our products are. The question for me would be, what are the challenges and the strategy you're putting in so that the products you're preparing are aligned with the needs of the customer? They are flexible in the sense that if I want to buy a product from your insurance company, I have the opportunity to be able to customize it. What are the challenges around achieving this, and what strategy do you have? Eric, to you.
Thank you very much. So for a very long time, insurance companies have been structured around products. And that's why you hear about general insurance, health insurance, life insurance, and not around customer segments. And the technologies that have been used have also been designed around products. We've built skills around products. And the focus was on develop a product and then push it to the market. And that's why for long you hear about insurance is sold, it's not bought, because we do the product and push it to the market. But things are changing, and the market is now demanding for products that respond to their needs and are flexible. So I work at Equity Life, and one of our purposes is to transform lives and give dignity and expand opportunities for wealth creation. And that can't happen where you're developing products in a black box and then pushing it to customers. So some of the things that we're doing are around being a startup. We have the advantage of being able to build our systems from scratch, our business model from scratch, and build a business model around customer segments rather than build it around products. So how we structured our business model right now is focused on the customer segments, the needs of the customer segments, and we've done a lot of research around what these segments are looking for, and then using technology to and the technologies that are available, like intelligence, to be what the market is seeing, and being able to allow the customers, self-servicing capabilities to be able to give feedback, adjust features of their products. And behind the scenes, you have, machine learning and AI that reprices products, changes product features so that they're able to quickly respond to the customer's needs. And this is very important, particularly for a life insurance company, because you sell a product to a customer that is for a long period of time, 3 years, 5 years, 10 years. And if your product is rigid and the customer's needs are changing over that period, you find customers surrendering policies midway, and the customer loses, the underwriter loses. So some of the products we're also developing do allow a customer to go to our digital platforms, be it mobile, be it on the web, and select the features of the products that you want. And then you're able to get a product customized for you based on the features that you want in that product, as compared to saying you're selling your standard policy. These are the features and this is the pricing. And lastly, we're also using artificial intelligence and machine learning and data analytics to improve on our risk-based pricing, so that we're also able to provide the right pricing to the customer based on their risk profile, and also to manage our claims frauds, because that is an area that I see in the insurance industry really has the industry, and part of that cost of fraud is transferred to the customer. So if we're able to manage our frauds much better, we're able to provide the customers better affordable products. Thank you.
Yeah, thanks a lot for that, Eric. And that then means that we need to be in touch with our data. We need to understand our customer, because data then means it's going to be at the heart of it all. And as I handle over these to Anthony, my last question would be for Daktari, in terms of when you look at NIC or even the insurance space itself, what extent are we using our data to understand our customer better, to drive the product's creation with that data, 360 view of what we are doing? Do you feel that insurance have matured to that level? And what are we doing, or what strategy are we having at the time?
Yeah, I feel if you look at from the global perspective, we have not harnessed the power of data, to be honest. There's still a lot that can be lent out of data that we get, particularly the volume of data that we get from the customer. If I give you an example of NIC, we are composite. So we have life and general insurance. So the volume of information that we get from customer, and the way we have utilized to get insight about the customer and improve the service. We are in the, I would say, probably in that scale of digital transformation, if I put in that line, probably in the still at the beginning of manipulating data and gaining some information. But it has also helped us to understand something that we didn't know before, that especially for the customers who are not in urban areas, what do they really want? What kind of products suits their needs, at what price? And in some cases, one of the challenges in our market is price undercuts. So do we really price those products correctly if we don't use the information and get to know the behavior of our customers? And also, how do we optimize, for instance, claim and then fraud prevention measures, and be on top of things? Those are some of the issues that we are still learning, and I believe it's something that for the whole of East Africa, there's still a lot to learn, and we are trying also to engage some experts. I think my friend Alex is also here from KPMG. He's one of the people that we engage to get the best out of data. So in short, I would say we have not really been able to use it effectively, but I think there's still an opportunity to exploit them.
Agreeable, and thanks, Tari. I see we have overshot our time, but just before we close, I would request that we just have a few questions from Anthony that covers a bit on cybersecurity. We apologize in advance as we encroach a bit of your time. Anthony, if you don't mind taking a few minutes and just take our panelists on these questions. Thank you.
So thank you, Martin. And I think very, very good insights that have been shared by the panelists. And mine is very simple, because when we talk about digital transformation, when we talk about data and all these strides we've made in that space, we need to also really discuss cyber. And we basically just want to also hear from yourselves as experts in the industry. And I'll start with Carol. When we talk about digital transformation right now, we joke that it has been COVID accelerated, right? And COVID really made many organizations reinvent their model, particularly on how even the users transact and what are some of the channels they need to adopt. And I believe now this is a sustainability conversation. So my question to you, in light of this and this accelerated move now to be more digital, what are some of the risks from where you sit? What are some of the cyber risks that are now in your radar, that now you also need to be cognizant of, and that now organizations need to also accelerate the interventions just to address?
So thank you for that, Anthony. And you're very right. COVID was the great accelerator for digital transformation. But what we hear, and the World Economic Forum talks about this, is that we have an impending cyber pandemic. And I think just listening to your presentation, I think that came home very strongly, that the next big issue for the world is cyber risks. And if you look at how connected we are as a world, there are 30 billion devices that are connected now. So on top of our economic connectedness, our global connectedness, our devices are also connected in a way that is unprecedented. And whether you're a digital alien, if I use the maturity ladder that we were given, or a digital leader, this is going to impact you in one way or the other. Now, as insurance, we are interacting with cyber risk in two dimensions. Number one, it's an integral part of our own operational risk profile. We face cyber risk just by virtue of the data that we hold, by virtue of our interactions within the ecosystems in which we operate in. And whether we are dealing with legacy systems, which I think is the reality of insurance companies, so you have old legacy systems and your patch management is not up to speed, there are known vulnerabilities in the systems that you work in, or whether you're transitioning into new technology, cyber risk really is probably our number one threat that we have to deal with. The other dimension in which we look at risks from an insurance perspective is that we are the ones who are supposed to be offering clients resilience by offering cyber risk insurance. Now, when you look at the landscape in Kenya, I would say there are not more than 2 or 3 companies that actually offer cyber insurance that provide resilience to companies. You gave a very scary statistic that you said people who suffer a cyber risk attack take on average 200 days or something like that to recover from cyber risks. I read another survey as I was preparing for this that said 90% of SMEs will fail if they do not recover within 5 days. They will fail within a year. So when you look at those statistics, then you realize there's a great need for cyber risk insurance within the African continent to support SMEs and businesses. But there are challenges, Anthony. Cyber risk is relatively new. And anybody who does take cyber risk insurance is considered an early adopter. Number two, you've talked about the dynamic nature of cyber risk. It keeps changing and evolving. And how then do we create models that help us to provide the right pricing and product to our customers? And then finally, we have limited data as insurers within Africa on how to formulate enough to help us to formulate models to determine insurance coverage, rates, and premium. So it's still out of reach for many clients. And then finally, I like what Dr. was talking about, data being the new gold. And we've talked about traditional data, but we've not talked about unstructured data. And part of being able to provide insurance for cyber risk is understanding the data. We don't have an understanding of how we collect this unstructured data, what form and shape it takes. So there are still many challenges, both from an operational risk profile as well as from a provider of cyber risk insurance.
All right. Thank you very much, Carol. I think that's very insightful. I like the fact that you've mentioned, and I agree that this next pandemic is going to be a cyber pandemic. And we could actually even see, particularly with what's going on with Russia and Ukraine, there's been a lot of activity in the cyberspace. So, and also just to also what you've mentioned, that particularly for SMEs, that majority of them normally fail if they don't respond effectively. And that is to bring the point home that it's not the reserve for just the big players, but everyone is ideally covered there. So thank you. So maybe I'll direct my second question to Eric, because we normally say that motivation is ideally the determinant of some of this, particularly some of the cyber activities we normally see. So in your professional perspective, what are some of the motivations that cyber hackers, or why would cyber insurance companies be targeted by cyber attackers? What is your view on that? What ideally would be the motivation there?
Thank you, Anthony. I think for me, the biggest motivator is the wealth of sensitive information that we hold as insurance companies. So for a hacker, from a hacker's point of view, the best company to attack is one that holds a lot of consumer data, that has a lot of personal identifiers. And I think insurance companies fall at the top when it comes to the kind of data that we do hold. And once a hacker possesses this kind of data, they're able to commit further, atrocities with it, commit identity theft, identity fraud, targeted attacks, ransomware. So for me, I think that is one of the biggest motivators why insurance companies are attacked. The other is we are in a process of transitioning or modernizing our systems from legacy systems, and there's a lot of change happening. And during that period, there's a lot of vulnerability in the insurance companies because they're focusing more on the system change. And unfortunately, security doesn't come at the forefront at that point in time. So that then also creates a good target for a cyber attack. And then just going along with that is around also the effectiveness of our cybersecurity measures. When you look at banks, they have really tried to invest quite a lot in cybersecurity and the measures that they put in place. And so then the next place for a hacker to go to when the bank becomes difficult is an insurance company from a financial institution's perspective. I think also the fact that we do offer cyber insurance covers, this also kind of has motivated an increase in ransomware. And I think I saw somewhere in one of the charts, someone indicating why insurance companies that have cyber insurance covers, or other companies with cyber insurance covers, seem to be targeted by ransomwares. That is a real statistic. I mean, we do have a cyber insurance cover, and the pricing has gone up. The level of cover being given has gone down. So that is also another motivator around why a hacker would want to attack a certain company. Thank you.
All right. Thank you very much. Very, very true, and I concur with that, particularly what you mentioned in terms of some of those factors that make it very attractive for cyber hackers to, conduct some of these attacks, or rather, targeting insurance companies. So I'm going to ask Dr. Dorie, particularly with what Carol and Eric have mentioned in terms of the risks that are there, the cyber risks that that particularly from an insurance company that are quite eminent, as well as the motivation as to why this happens. In your view, how do you rate the preparedness of insurance companies in responding to some of these attacks? And even further, what should be prioritized, and what should insurance companies prioritize in terms of just building those safeguards to make sure that this doesn't happen?
Yeah, first, I like what Carol has said. We as insurance companies, we are the ones who are providing the cyber resilience to our customers. But how resilient are we? That's another question. The cyber risk is still something new. Even the cover that Eric has mentioned is still offered by very few companies. And in Tanzania, probably two companies, ourselves and one or two, probably three. So there's still a lot to learn about the cyber risk, and also we must take deliberate measures to put it in our strategies. How do we go about it, and how do we allocate resources in order to be able to deal with it, to be prepared, and also to deal with the consequences when they come, because it's a matter of when, not if. So we have to be ready. But we also forget about people. There's a need to have a culture change within our organizations. People need to be more aware, more prepared, and also given necessary skills that to deal with this kind of risk. And most of these risks, and in some cases, they might happen from inside, even unknowingly. There are a lot of links that we use, and also with the COVID, we have seen people working from home, so we access corporate servers from outside, which was not the practice before. So we are more exposed now. So we need to also understand, and from the presentation that you made, even from the survey from the CEO, everyone is still getting prepared, getting knowledge about it, and also how to deal with it.
Right, excellent. Thank you very much, Dr. Dorie. And I think my last question, I'll direct it to Eric. We're looking at different statistics earlier on, and one that Communications Authority shared within the last quarter is that in Kenya as a country, we had 79,145,000 detected cyber threats, right? And there's always been this conversation on quantifying the cost of cybercrime. And of course, we have different numbers, different schools of thought, but I wanted to ask you, from a sectoral perspective, from an insurance sector perspective, what in your view would be the actual cost of cybercrime?
Yes, so from a quantitative perspective, I'd say we don't know. Because as you've heard from the conversations, we're still trying to even find our footing around understanding cybercrime, putting in measures for cybersecurity. So I haven't come across any organization or anybody that has actually done an actual computation. But even for those industries where it's been done, I think the numbers are more of estimates, because it's very difficult to come up with the true cost of cybercrime. They're the immediate costs that you'd incur when a breach happens, costs related to legal fees or forensic investigations or regulatory penalties, which are easy to identify. But the other costs, for example, relating to reputational risks that result from a cyber breach, and it will be as adverse as the business shutting down. The other long-term costs are what I'd call the slow burning costs related to, as we spoke about, business resilience. How quickly do you recover? How quickly do you get your systems back up? And then how do you strengthen your systems to be able to improve on your security profile? As much as the costs are worth it, they are not cheap. So for me, I think it's a bit difficult to quantify the real cost of cybercrime. But at the moment in our industry, I haven't seen anyone who's made an attempt to even try and quantify based on what they have seen.
Okay. Well, very good response, Eric. And I think that's one of the areas that maybe as an industry, we need to consider because now we also talk about ROSI, return on security investments, which is also a conversation for another day. But I think in the interest of time, I'm gonna pause there. Thank you very much for your excellent questions. I'm sure the audience found it very insightful. I'm now going to hand it over to my colleague, Martin, back to you.
Thank you so much, Anthony. And thank you, our panelists, for sharing your insights. Sometimes there are instances where we can call in panelists and they don't all go out in terms of sharing some of the challenges that they are facing within the organization. So really thank you for taking your time to share your insight. I do believe, and we can actually see some of this on the chat, people have felt this was an insightful and a timely conversation, especially within the insurance space. This is a conversation that needs to continue. I would also like to thank the team that tuned in online. Thank you for making time for this. I do acknowledge we have overshot, but also I believe that the conversation was as helpful, and hence the reason you have chosen to stay a bit longer, to stay with us all the way to the end. So thank you so much. We shall be sharing this presentation to the rest of the bigger audience, so that in case you have questions, in case you want to reach out to know where to start with your digital transformation journey, how can you stop the bleeding in terms of some of the cyber issues and challenges that you're facing within the organization? We are here to help. We are here to support as you walk through the journey. So thank you so much. I really appreciate, and I would like to bring this to a close. Thank you, our panelists, and we really look forward to engaging further as we have even more insights coming through. So thank you and have a good day.
Thank you very much.